All right. We have welcome to accounts. We have a question, a past paper question from Zica. All right. This is financial accounts. Right. The question reads: Heaven Limited Company's bank column of the cash book on 31st March 2017 showed a positive balance of 500,000, while upon receipt of its bank statement, excuse me, the statement showed a positive balance of 400,000. Right. So basically, what happens here is that you as a business, all right, your records of your money are found in your cash book. Now, the bank's records of your money is found on the bank statement, all right. So at the end of the month, the bank is going to give you a statement, right? You're going to compare it with your cash book, right? Then you find that the balances are not tallying up; they have to be equal, all right. And if they're not equal, it's due there are some errors or because some transactions were not recognized either by the bank or by you. So it's your job now to make sure that their books tally up. All right. But if you notice, if you see here on this part of the question, it says prepare a bank reconciliation statement for 31st March 2017, starting with balance as per revised cash book. All right. So in this case, right, when we make our bank reconciliation statement, we're not going to use this bank balance of 400,000. We're going to use our balance from our revised cash book. So in this case, our updated cash book and our bank statement are not going to tally up, all right, because we are using the balance of our revised cash book, all right. If the question told us just to prepare a bank reconciliation statement, we would have used this balance here. But our balance would be from our revised cash book. All right. So do not worry if it doesn't balance. The question has given us the reason why. All right. So upon investigation as to what could have led to the difference in the balances, the following issues were discovered. All right. So the first thing that I'm going to do before I read out all these transactions here is I'm going to open my new updated cash book. All right. And open that. All right. This is the new cash book. All right. Haven Limited revised cash. All right. So they've told us a positive opening balance brought down in the cash book on 1st March 2017 should have been indicated as 40,000 instead of 50,000. All right. So we have an overcast balance here. All right. It's supposed to be 40,000, but it was recorded as 50,000. So we're going to find how much has it been overcast by. 50,000 minus 40,000, that is 10,000. So we have a balance which has been overcast by 10,000. All right. So this balance was supposed to be on our debit side. All right. It's supposed to be on our debit side and it's overcast. So the way we're going to correct this error, we're going to credit our um, revised cash book. All right. Overcast error. All right. 50 minus 40,000, that's 10,000. Okay. Forgot to mention one thing. All right. Our revised cash book, we're going to start with a balance of 500,000. And we've been told it's a positive balance, and this is an asset account. So our balance will be on our debit side. If they told us a negative balance, that balance will come on our credit side. All right. Dividends received from Nana Limited Company amounting to 80,000 were paid directly into the bank, but no corresponding entry was made in the cash book. All right. So we bought Haven Limited, we bought shares from Nana Limited, And as a shareholder, we are entitled to dividends, all right? So we received dividends amounting to 80,000. So we have to debit our cash book, all right? So we say debit our cash book dividends, 80,000. All right. Number three, bank charges of 5,000 were reflected on the bank statement, but no entry had been made in the cash book. All right. So our bank doesn't keep our money for free. We always receive a charge at the end of the month, which we have to pay. So we have to pay this 5,000. All right. So it's a 5,000 was our bank charges. All right. A check drawn amounting to 10,000 had been entered in the cash book, but no entry was made on the bank statement as it was not presented for payment at the bank. Right, so here what we're talking about are unpresented checks or outstanding checks. Right, an outstanding check or an unpresented check, this is a check issued by the business to make a payment, all right, but it is not recorded in our bank statement or recognized, right? So we made a payment of 10,000, we recorded it on our credit side, on our cash book. So on our bank's reconciliation statement, right? So here, our bank reconciliation statement, okay, we're going to say unpresented check. Right. So now this was a payment, all right? It was appearing on our credit side. Our bank statement is the opposite of our cash book, all right? What appears on our debit side, all right? Whenever we receive a payment, we debit our cash book, but on the bank side, they will credit, all right? Whenever we receive a payment, we debit our cash book, but the bank on the bank side, it is a credit, right? And whenever we make a payment, we credit our cash book, and then on the bank side, it is debited, right? So the bank statement is just like a reflection, right? So this unpresented check, right, was sitting on our cash book, right? So on our bank statement, okay, on our bank statement, it is going to be debited, right? 10,000. And we debit 10,000, right? We haven't yet acquired our balance, but we'll just make this balance as per revised cash. So we'll come to our reconciliation statement, but we have to deal first with our cash book. All right. So there's unpresented checks of 10,000 with debit. All right. We'll go to number five. A payment for rent amounting to 10,000 was entered on the receipt side of the cash book instead of the payment side. So let me illustrate what's happening here. Let me just make a small T account. All right. So we made a payment of rent. All right. Now it was wrongly entered on our debit side, 10,000. All right. So we have to correct this error. All right. We need to remove this 10,000 from our debit side. Right. And we need to have the 10,000 on our credit side. All right. To reflect the payment of rent. All right. So the way we can do that, all right, is if we debit our credit side 20,000, all right? Debit our credit side 20,000, right? 20 minus 10,000, we're going to get 10,000. Okay? We remain with 10,000 on our credit side. This represents our payment for rent. Okay? So that's how, when we do this, we're going to clear this 10,000 from our debit side and remain with our rent payment on our credit side, right? Now, suppose if you make the mistake, all right, and you just credit the 10,000 to the cash book, all right? If you just credit like this, what you mean is you have canceled out this transaction. All right, you have cancelled out this transaction, meaning no rent payment has been made. All right, you have just removed the 10,000 from the debit side, but no payment has been made. Right, so to get rid of this 10,000 and remain with the 10,000 on our credit side to reflect our payment, we need to credit our cash book 20,000. Right, this 20,000 will ensure that this 10,000 is cleared away, and it will ensure that we remain with a 10,000 on our credit side, which reflects the payment. Okay, so it's credit rent 20,000. All right. A standing order relating to the company's water bill of 20,000 was entered on the bank statement, but no entry was made in the cash book. All right. So a standing order, these are payments, which these are payments that our banks takes care of for us. For example, nowadays you can pay for DSTV, water, electricity via your bank. All right. So those are standing orders. All right. So we'll credit our cash book. All right. So that we have paid standing order 20,000. Okay. Checks received from B Banda and C Calabar totaling 127,000 were recorded in the cash book and paid into the bank. However, this amount was not credited by the bank until 2nd April. All right. So what's happening here? This is what we call unaccredited checks or lodgements. All right. An accredited check, all right, or a lodgement. So basically, what a lodgement or an accredited check is, these are checks received by the business, all right, that are payments, all right. This is a payment that we've received, all right. We record it in our cash book, but our bank does not recognize it yet, all right. This is the opposite of an unpresented check, all right. Remember, an unpresented check or an outstanding check, this is a check referring to a payment that we've made. We've made that payment, recorded it in our cash book, but our bank hasn't recognized that. But now we have a lodgement or an accredited check, right? This unaccredited check, this is a check received by us, which refers to a payment, all right, which we record, but our bank does not record. All right, so our bank, all right, we'll go to our bank reconciliation statement and say an accredited check or lodgement, right? We're going to credit 127,000. All right. Because in our cash book, it is going to be on the debit side. All right. All right. A check amounting to 8,000 was entered twice on the receipt side of the cash book. All right. So we received money. Let's just think of this as our cash book here. Received money, it's been entered twice, so received 8,000. All right. But it's been entered twice, so basically we have 16,000 here. All right. So what we have to do is correct this error because we have to remain with an 8,000 on our debit side. All right. So we'll credit our cash book 8,000. All right. So 16,000 minus 8,000, we get 8,000 on our debit side. All right. So this 16, so this 8,000 makes sure that this 16,000 is brought back to its original value of 8,000. All right. So we credit. All right. Check error 8,000. All right. Now we can find the balance of our cash book. All right. So that we can use it for our reconciliation statement. Okay. So let's see which one is high. It looks like the debit side. No, it looks like the debit side is higher. 580,000. All right. All right. Let's find the total of our credit side. 63,000. All right. All right. So let's find our balance carried down. All right. 517,000. All right. So balance carried down. 517,000. So this is the balance we're going to use in our reconciliation statement. If it wasn't stated in the question, we would have used 400,000. All right, this amount 400,000. Here, this positive balance. All right. So we go to our come to our bank reconciliation statement. All right. Balance as per bank book 517,000. Right. So remember debits we subtract, right? And credits we add, all right? Because remember, whenever the bank credits you, you are receiving money, all right? You are receiving money. And this credit entry on the bank statement will be a debit entry on your cash book. And whenever the bank debits you, it means it's removing money from you, all right? And on our cash book, we'll have it the corresponding entries on the credit side. So as I said, these are just a reflection of each other. So 517,000 minus 10,000, we're going to get 507,000, right? We say 507,000 plus 127,000, right? We get a bank balance of 634,000, right? So that ends our question.